Once again, welcome everyone. This is Kevin Gilmore, Executive Director of Nazarene Benefits. Thank you for joining us today for this virtual workshop, which is going to cover Minister's Benefits and the path to retire well. We have been presenting this workshop at district assemblies and PalCons and other types of places over the course of the last year. And we're going to cover this material today. So I'll start with a high-level overview of kind of the broad high-level view of benefits that we offer, and then take a deeper dive into the Minister's Match program, which of course is one of the retirement benefits that we offer. So let's jump right in. And before I do, I want to say a word of prayer. Father, thank you for this day, for your grace and mercy in our lives. I thank you for all those who are participating today, whether panelists or participating as participants. I pray and ask for a special blessing on our pastors and our ministers as they serve, that you'll bless their ministries and help this to be a time of learning and great information for all involved. We give you thanks in Jesus' name. Amen. So before we actually dive into the details, let me provide some background information, which you may or may not be aware of. This pie chart provides you with an illustration of where we spend our time at NBUSA. You'll see that the right half of this pie is all retirement benefits. So the big chunk is the 403B plan. That's the retirement plan for active ministers. And then our legacy pension plans, which of course closed in 1996, but we are still making sure we manage pension payments to retirees. And we still have a few hundred pastors who are in active service that are still covered by that plan. Then if you move to the left, you get into survivor benefits, which is the term we now use for life insurance benefits, long-term disability insurance. And then we round it out with educational programs like what we're doing today with this workshop, the quarterly that we send out every quarter, and other materials we produce on our website. And then a small part of our time is in the benevolence program, which is not a significant portion of our time or the funds that we budget, but that's for helping ministers financially in times of crisis. And it's one of probably the most significant things we do in terms of its impact on those in need. I'd also like to share with you a comparison to what it looks like to participate in our benefit plans versus if you've held a job in the secular world outside of the church with a single employer. This is what your benefit structure probably looked like. There was 1, 2, or maybe 3 different benefit plans offered by that single employer who was the sole sponsor of those plans. And then all of the employees of that employer participated in one or more of those plans as they choose. In our church denominational world, it looks a lot more confusing, but it's basically the same structure, but it's different in certain ways. The Church of the Nazarene is the primary sponsor of the benefit plans that we offer, but then all of the pastors and churches participate through as co-sponsors of the plan. So we have what we call a multi-employer plan in the denominational church world, and then NBUSA is the single administrator of all of those plans, and each of the employees of the church entities that participate, which are mostly our ministers, but not all, we also offer some benefits to church staff, participate through NBUSA as co-sponsors with the general church. One of the reasons I share this slide is because in the slide on the left, there's one human resource department, there's one payroll usually, and it's a pretty simple and vertical chain of communication from the plan benefit administrators down to employees. In our church world on the right, we have thousands of churches participating, thousands of participants. We don't have a common human resource department. We don't have a common payroll system. So it makes it more challenging for us to communicate to all of our participants. And so I would just ask, if you get information from us, and we try not to overload you with communications, do your best to pay attention to it if you would, and because it's usually critical information, and it will help you to maximize the benefits that you deserve through NBUSA. If you're not already aware of how we operate, we are funded through the Funding the Mission formula, and we are one part of that formula. We're 2% of the total of 10%, and goes to the NBUSA fund. And before I go any further, I want to say a big thank you to all of our churches and districts out there who support us in this way, because without those revenues going into the NBUSA fund, we would not be able to operate. So what do we do with the funds that you provide to us? This chart on the left is a breakdown of how we have spent the monies provided to us over the past 9 years, from fiscal year 15 to fiscal year 23, and our fiscal year ends in September. You'll see I've got circled that 20% of the funding over those 9 years went to the active ministers in the 403B plan, while 61% was dedicated to our legacy pension plan, which was closed in 1996. And if you contrast that with what's on the right, which is our last fiscal year, the fiscal year that ended September 30th, 24, you'll see that the amount of funds that we have dedicated to the 403B plan has significantly grown. It's almost doubled. And while the level of funds required to fund our pension plan has decreased to almost 44%. And this is the trend that we expect to see going forward. The legacy pension plans that were underfunded for many years have now reached a stabilized status, and our actuaries, independent actuaries who evaluate those plans every year, now tell us we can reduce our level of funding to those plans in order to meet our obligations to those participants, which means we have more resources to dedicate to active ministers. And you'll see why that's important as we go through the rest of this presentation. One of the complicating factors about not having a common HR and a common payroll process is that we've got to make sure we align benefits for the thousands of participating church employers. And so the one thing we have to do is simplify as much as possible. And we do that by saying you are evaluated as a Nazarene minister for what our benefits on January 1 of every year. It's the same eligibility criteria date for every participant in the plan. So we look at your ministerial credentials, we look at your ministerial role, and also what your level, the church's support where you serve, their level of NBUSA fund support. And if you meet the criteria, then you get a base level of survivor's benefit, that's life insurance, a base level of long-term disability coverage, and you have the ability to receive matching contributions into your 403B account. And again, there's different requirements for that, but your level of NBUSA fund support is a critical component of how much of a match you can get. Under survivor benefits, I mentioned a moment ago, these are base level of insurance benefits. So this is not enough insurance. If all you're relying on is insurance from NBUSA for your coverage, I guarantee you it is not enough. This is just a base level, and it's based on your age. So if you're 50 and under, it's $30,000 of coverage. Age 51 to 70 is $15,000. 71 to 75 is $7,500. Remember, this is for active ministers. And if your spouse predeceases you, there's a $2,500 benefit for you. According to IRS regulations, proceeds from life insurance policies are not considered taxable income. So if you were, or your family were to get this benefit paid out, it is not considered taxable income. And I mentioned these are base levels of insurance, and we make available the purchase of additional, what we call supplemental coverage, including coverage for your spouse. And when your spouse purchases coverage through our plan, your dependent children also get included as part of that coverage at no additional charge. When you retire from active ministry, there's also a retirement benefit for our retirees based on your years of service. And if you happen to be also a part of the legacy pension plan, there's a benefit there. You don't get both, but you get the higher benefit, whichever one provides the greatest amount of life benefit. Under the long-term disability plan, it's a $500 per month benefit. After you become disabled, there's no waiting period for the coverage. The payments start 3 months after the disabling event. There are some pre-existing condition limitations, and if you have questions about those, please contact our office and we'll connect you with the insurance carrier that underwrites those so we can clarify that. And you can purchase up to $1,500 of additional available coverage, since this is just a base level. An interesting thing about long-term disability, it used to be considered taxable. Make it be claimed as housing, became effective the 1st of this year. So if you do become disabled, this will not be considered taxable income to you. We don't talk about it a lot, but we also have accidental death and dismemberment insurance available to you for your purchase. Now, the survivor's benefit and the disability that I just spoke to a moment ago, those are all provided to you by NBUSA at those base levels. This is additional insurance for accidental death and dismemberment that you can purchase on your own. and it's underwritten just like the long-term disability policy. One of the benefits of being a part of such a large organization, benefit-wise, is that you often get the ability to purchase supplemental insurance at greatly reduced rates than if you had tried to go out and do this on your own or just through your church. If you struggle with health insurance, we have partnered with Guidestone. Guidestone is the benefits arm of the Southern Baptist Convention, and they have created quite a great plan. It's as you can see in the bottom of the screen there, they offer a faith-based medical coverage uniquely designed for your ministry, and they will write you a plan, a policy down to a single employer. If you're the single employer minister of your church, they will write a plan for you. And if you already have a plan in place and you're wondering if you're getting the best deal, you can ask Guidestone to quote your coverage so you have something to compare to. But again, it's a faith-based medical coverage plan, so you've got your money is going into a plan who is using the funds for healthcare the way you would want to do that. A little more than a year ago, we adopted a new brand, a new name. That's where NBUSA came from. In the process, we also adopted a new vision statement. And our vision is that Nazarene ministers retire well. Now, retiring well is going to be different for everyone, but we know that to retire well, the average local Nazarene church minister is going to need resources from three places. The first is your level of active savings. This is your personal savings that you put away in your own savings account, or maybe you have an IRA, whatever you want to do there. Then there's the benefits from Nazarene Benefits, which is not just benefits from NBUSA, but it's also the retirement contributions that your local church employer makes for you into your 403b account. And the last and important leg of this three-legged stool is Social Security. And I have the Social Security website listed on the screen. If you have not recently checked your level of benefits and your earnings history with the Social Security system, we would encourage you to do that, and do that at least once a year. You want to make sure they're accounting for every possible level of earnings that you would get credit for retirement. And it also gives you an idea of how they project your retirement to look like once you reach a normal retirement age. You know, as a member of the clergy in the United States, you have some unique tax advantages that the average American citizen taxpayer does not have. The first is housing allowance. So you get to shelter a portion of your gross income from federal income taxes. You still have to pay Social Security and Medicare, but you get to shelter it from federal income tax, and usually most state income taxes, but you need to check with your individual state to be certain of that. And then if you make contributions out of your paycheck to your 403b account, you avoid federal taxes and Social Security and Medicare taxes on those contributions. And lastly, when you make a distribution, and this is where you get I think the greatest advantage, is when you make a distribution in retirement, our plan and our policy at NBUSA says that we are automatically qualifying those distributions as eligible for housing allowance in retirement. So if you plan it appropriately, you will see how you're able to take money and put it into your account, let it grow while you're in active service, and then start taking it out in retirement, and you will never pay a dime of income taxes on any of those funds. Now, it's still subject to the IRS rules about limits on how much housing allowance you can claim. But the big difference is, if you look at the bottom of this screen, there's no more pre-approval of your allowance amount. You know, you do that with your church board every year. In retirement, you don't have to seek a pre-approval of your housing allowance from your former church or from NBUSA. It's just you need to make sure that you keep track of your expenses. You have documentation to support those expenditures, documentation to support the fair market lease value of the home and its furnishings. And whichever one of those is the lower number, that's the amount you can claim as housing allowance. You'll also note here there's an annual tax reporting. When you start taking money out of your 403b account, Fidelity will send you a 1099-R at the end of the year, and they will show that the taxable amount of the distribution has not been determined. That's because they know you're a minister and you may be claiming all or a portion of it as housing allowance. So they're telling the IRS that we have not determined whether this is taxable or not. So the IRS is going to look towards you as the taxpayer and how you treat the distribution of those funds on your personal tax return. So that's why it's important to keep good records and to keep those records on file in case you get a friendly letter from the IRS saying, we'd like to know more about your tax return. One of the questions we often get in discussing retirement is, how much do we need for retirement? And that, again, retiring well is different for everyone. It's not the same for person A or person B. However, there are some rules and some tools that you can use, and this is one of them. Fidelity, this is something we have stolen from our friends at Fidelity, who are the record keeper of our 403B plan accounts. And they suggest that based on your age, which is the green bar across the bottom, you should have some multiple of your current gross income. It's important to remember gross. I mean, don't take off your housing allowance. It's your gross income in retirement savings. So look, if you're age 40, for instance, in this chart, and you're making $50,000 a year, you should have $150,000 in your retirement account. And you can see how it plays out all the way to age 67, which is the currently normal retirement age according to Social Security system. Now, you might look at this and say, Kevin, that's pretty rich. I don't think I could do that. I would understand that. And again, this is not the same for everyone, but I would encourage you to use something like this and set a course that you are comfortable with based on what you think you're going to need in retirement, and then measure your progress every year. The second most important question we get then is, well, then how should I save for retirement? Once we've talked about how much you need for retirement, and then we talk about how you should do that. And again, we're going to look to Fidelity for some advice here. And most financial planners will tell you the same thing, that you should begin saving 15% of your annual gross income. You should do that beginning by no later than age 25. And that 15% that you need to save includes what you put away in your own retirement account, what your local church employer puts in, plus what NBUSA matches. It's all of those things should make up that 15%. So it's not just 15% out of your check. Point number two is, while you're in active service and you're investing in your 403B account, you want to keep more than 50% of your stocks on average, of your investment in stocks on average. The reason for that is you have earning years ahead of you because you're in active service. You're going to need, that's where the greater return is over the long term, is in the equities market. So you want to make sure you're all about growth when you're in active service and your retirement assets. Number three, you should plan to retire at age 67, which is normal retirement age, or whatever age you think is most appropriate for you. But you should also plan to live to age 93. You don't want to plan your retirement to the average life expectancy, which is somewhere in the low to mid 80s. You want to plan to age 93 so that if you do live longer, you don't run out of assets in retirement. I would tell our younger ministers who may be on this workshop that Fidelity is now advising their younger clients to plan to live to age 100 for financial retirement planning purposes. Number four, you need to plan to maintain your same lifestyle that you have today, or at least document how it would change in retirement. And don't forget, healthcare costs usually grow when you're in retirement, so it's not going to be the same as you have today. And the last point on this slide is to review your progress annually and then make adjustments as necessary. You have a couple of choices on how your funds are invested with Fidelity while you're having funds added to your 403B account. If you look all the way to the right in that green shading column, you'll see self-managed. Means you can take care, if you feel like you can handle investing the funds and making all the selections yourself and rebalancing when necessary, you can do that, and you'll just pay the expenses within the funds that you choose. You can also pay Fidelity a small fee, and you can go to their website and see what their current charge is for that, and they will manage your retirement account for you, not just what you have in Fidelity's 403B, but what else you might have in other accounts. Like maybe you have another pension plan from a former employer, or you have a spouse that has money in a retirement plan, or you have retirement accounts, IRAs. They can look holistically at you for a fee, a percentage of the assets that you have under their management, and they can manage those for you. And the third option, which I want to talk about in more detail, is what's called the single fund option, where you're just subject to the expenses within the fund. But this is a target date fund. If you're not familiar with target date funds, is we have several of these, about a dozen of them out there in the portfolio for our plan, is you go out and you pick the year that's closest to the time you will intend to retire. And I would say find the one closest to it and go up to the next latest date. So let's say if you plan to retire in 2047, I would use the 2050 fund. And if you look at the asset mix in this particular 2050 fund, this is the Fidelity fund, you can see the blue and the orange are equity investments, domestic and international equities. And you can see about 90% of these funds are in equities and about 10% in bonds or fixed income or other short-term debt or other instruments. So the reason for that is you want all of those assets working to grow for you, not just dividends, but in value. And you can see as you get closer, older, get closer to these nearest retirement dates, these funds get more conservative, where now you're down to 2010, which is already, I know that date's passed, but you can see it's probably about 20% in equities and 80% in fixed income bonds. And that's because you want to be more conservative in retirement. It's all about growth when you're active, and it's all about income when you're in retirement. The nice thing about these target date funds is there's professional managers that are investing your funds for you. They rebalance into the different segments of the market. They begin to get more conservative without you even asking as the older you get. And so if you're intimidated by the market, you don't want to pay a financial planner or investment counselor to manage your funds for you, this is a great option for you. Choose a target date fund that best fits your plans for retirement, and then just let them manage it for you from there, and you just monitor it periodically. We have a retirement readiness problem in the church, and that's that over 70% of our ministers are not contributing to our Nazarene 403B retirement savings plan. These are our active ministers. I know there's good reasons for some of them. Some of them have other plans, but there's a significant number of our ministers who are not prepared and are not preparing adequately for retirement. And so we've been asked to address that challenge. And I know one of the reasons that some don't save for retirement is because they think it looks like this, really complicated. Well, I have good news for you today. We developed the Minister's Match program and made it effective January 1 of 24 to address this issue. And it is not a complicated program. In fact, we simplified it as much as possible, but it does require greater activity on the part of you, the local minister, and your church. And I'll get into that. Here's the results from the first full year of the program in 2024. You can see in the upper right, we had only 24% of our otherwise eligible ministers, those are credentialed ministers who would otherwise be eligible, who actually received a match. And then to the lower right, there's another 34% of the ministers, currently active ministers. They and their churches did everything necessary to be eligible for a match except for one thing. Neither the minister nor the local church contributed anything to the minister's 403B account. So the bottom line requirement of the matching program is if there's no local effort by the minister and or the local church, then there's nothing for us to match. And so we need to get those 34% doing some form of contribution, either they and or their local church, so that we can match those dollars going forward. Let's talk a little more about the 403B plan itself. It's a contribution plan, meaning you get out of it at the end based on the contributions that go into it. It's not a pension plan where there's a guaranteed formula at the end in retirement. As of the end of the year, we were about $800 million in assets under management with over 13,000 accounts. Contributions get into your account from two sources. You as a minister and your local church. That's the local effort that we look to match. And then the other sources from us, the match program, based on what you do in local effort. We have a board of directors that's representative of clergy and laity from across the United States that serve on our board. And we also have an investment committee. This is the investment committee of the general church, not an investment committee of NBUSA, that provides oversight of all the financial investments of the general church, including our retirement funds, including an evaluation of how the funds within the Fidelity plan, the 403B retirement savings plan, are performing. And the committee utilizes an independent financial advisor. This is a financial who has no in compensation on a flat rate or what the funds do. So they are totally independent. They don't have any conflicts of interest. And they're out there making sure that the funds are performing as they're supposed to. The investment managers are performing as they're supposed to. and then they make recommendations to the investment committee on when changes are needed. The other important factor about our 403B plan is this last bullet point, that it's a very low cost and expense structure. And here's what that looks like from a study we had done a few years ago. That bar across the top, that orange colored bar across the top, is the average cost per $1,000 for an account, whatever your balance is. 2.19% would be used in expenses of the plan. And here's the Nazarene plan, 0.49%. So I looked at this back in, excuse me, in June to see how much has this changed, and it has dropped to 0.334% as of June 24. So you can see we're at the bottom of the industry in terms of the costs associated with administrating your accounts. We use Fidelity Investments as our record keeper, and Fidelity, our relationship with Fidelity, offers all kinds of free tools for you to use, planning tools, advisory services. You can call them, you can go to a local branch. They have a diverse set of mutual fund choices that we offer in the plan. A couple of years ago, we added a Roth component to the plan. Now you might be saying, well, Kevin, I'm a minister and I have the option for housing allowance and retirement. So why would a Roth component? If you're not familiar with what a Roth is where you put pre-tax, after-tax money into your account, and then you don't ever pay taxes on what the earnings and what you take out at the end in retirement. But when you pass away as a minister, your spouse does not inherit the housing allowance benefit. It stops upon your death. So you might want to consider putting some of your funds into a Roth component so that upon your passing, your spouse and or your kids or other heirs might inherit those dollars on a tax-free basis. Another important thing to remember about the Roth component is any matching that we do or your local church might do on your account can only go into the traditional side of the plan. You're the only one who can put money in the Roth side of the plan. That's just the way the IRS rules are today. We also, a couple years ago, added a Fidelity brokerage link option to our 403B plan. Time to time, we have people who want more choices on how they invest their funds than the prescribed number of funds that we have in the plan. And as a fiduciary, we can't open up all the funds in the regular part of the plan. We've got to use our discretion and come up with a diverse set of funds that give you access to all areas of the market, but aren't too many to choose from. And so if you adopt a Fidelity brokerage link option within your account, then that opens up your ability to invest in the entire universe of mutual and index funds. You can buy CDs and treasuries through there. But one thing you need to remember is when you do go down the Fidelity brokerage link road, it's like opening a retail account, even though it's part of your 403B account. You can't buy individual securities. You can't buy sophisticated financial instruments. And you're going to pay retail fees and fund costs associated with that activity. And furthermore, there's no oversight by the investment committee. So you need to remember, and if you go down this road, the investment committee of the general church is not overseeing what you're doing. They're not going to make recommendations for changes in funds. That's only in the traditional part of the plan. So if this is an option for you, just be clear that you understand the risks that are there and the additional costs, but you are welcome to use that. Wanted to share with you real briefly as we go forward what the return on investment has been in the 403B plan, not just over the last year, which it was kind of hard not to do well in the plan last year. You can see we did a 23% return on investment net. Now this is net of expenses. So after all expenses are paid, and a 5-year average was 9.56%, the trailing 5 years. So that's still, remember, you want to try to be somewhere 7% or so in retirement. And the last 10 years has been 7.74%. So when we talk about using a 7% rate for long-term planning for retirement, this shows you and kind of demonstrates for you, even though there's dips, we had a 20% loss in 22 and a break-even year almost in 15. Over 10 years, it was a 7.74% return on those invested assets. Let's look at the Church of the Nazarene manual about the calling of a pastor and about providing remuneration. And it says that providing the agreed upon remuneration in full shall be considered a moral obligation by the church. And I've added the emphasis here. So it is a moral obligation that the minister's compensation remuneration in full be considered. And on the local church board section, it says that the church board is responsible to determine the amount of remuneration and benefits including retirement benefits. And it's important to note, as I've done in this yellow box here, that your church paying its connectional budgets to the NBUSA fund, that's only part of that obligation. We use those funds to operate all of our benefits. Those funds don't go directly into your account as the local church minister. So it's important that beyond that, the church helps and participates in contributing to your account. So we were posed with the question of how do we address the significant lack of retirement readiness among our ministers? And the answer came down to this. We needed to require more local effort, but NBUSA also needed to increase what we were providing. And so we've done that through the Minister's Match program. I'm going to walk through a quick example of what that looks like. In this example, you'll see the table on the left is the policy table that says, well, if the church pays 100% of its connectional budget to us, then that minister is eligible for a 50% match up to a total of $2,500 from us. So if a total of $5,000 is put away between the minister and the church and the minister's retirement account, we'll match it with $2,500 from us. So if you go over here to the right box, in this example, the church is paid 100%. The minister contributes $1,600. The church has come alongside the pastor and said, Pastor, we want to help, so we'll match dollar for dollar what you do. So they put in $1,600. And this minister has student debt. So a feature of this plan that changed 6 months after we started it was that we now allow student debt to be counted in the local effort. Even though this money is not going into the minister's retirement account, those are the payments that this minister made. And the reason we went this direction is because we believe it's important to pay off your debts. The quickest way to financial freedom and independence is to eliminate debt in your life. And so we wanted to give credit for those ministers, especially the younger ministers who have student debt payments. In fact, I tell younger ministers, don't put anything in your retirement account. Focus on paying your debt and let us match those dollars. And then when you get the debt paid, then start putting those numbers in your retirement account. So you can see between the contributions to the retirement account and the $2,400 in student debt, this minister has $5,600 in what we define as local effort. And local effort is what we're going to match. And so here's what NBUSA will do. We'll match 1,600 and this 2,500 for a total of 5,700. We will match that at 50%, but not more than $2,500. So here's the actual results from this past year's program that ended in 24. In 2023, we had 1,200 ministers making contributions to their retirement account and getting some form of a match from us. Under the new plan, it's grown by 54%. So nearly 1,900 ministers now have gotten active and now receive some type of a match. The amount of money that we contributed to the average local church minister's account was $600 in 2023. That number has increased by 184% to $1,700 was the average amount we contributed to a local church minister's account from NBUSA. And here's what those numbers look like put together. There's the 1,700 from us, 4,000 or so from the local church and or the minister together. And again, we don't care if it's both or one or the other. We just want to see local effort. So about 70% of what went into a minister's account was from the local minister and church, and about 30% came from us, for a total of $5,766 going into a minister's 403B account on average in 2024. So here's what that looks like. If a minister contributed that level every year for the next 20 years and it earned 7%, they'd have $250,000 in their account over 20 years. If they did it for 30 years, they'd have almost $600,000. If they did it for 40 years, they would have almost $1.3 million saved for retirement. These are realistic numbers, and I guarantee 7% is going to probably be the low end of the scale. You'll probably earn more than that. So one of the questions we got asked when we first developed this plan is, it's not affordable. I've had talked to many, especially small church ministers, who said, Kevin, I don't have any extra money. The church doesn't have any money. There's no way we can afford to do this. And so I'll respond to that with this question. Where else can you invest your funds? Because you know what? Retirement is coming unless the Lord comes first. Retirement is coming for every one of us, whether we're prepared for it or not. So I would ask, where else can you make an investment and get a 61% return? And I'm not talking about Bitcoin today. So here's how it works. If you would invest $1,240, which comes out to about $100 a month, you'll get a $750 benefit from us under this program. And here's how it works. a contribution of $1,500 of your funds out of your paycheck. There's a tax savings to that. I explained what your tax advantages are earlier in this presentation. So it only cost you about $1,240. And then you're going to end up with $2,250 in your account. That's the original $1,500 from you and $750 from us. That's the 61% return that I was talking about. If you did that for 40 years, you would end up with $450,000 in your retirement account. And what you'll notice in this example is I didn't show any contributions by the local church to help this minister. If the local church comes alongside and helps the minister in some way, matches dollar for dollar, matches half, it just really improves these numbers. And here's how local churches can help. They can make discretionary contributions. They can just make amounts on an arbitrary basis or maybe some planned schedule anytime during the year they want. Or they can do a matching, your own local church matching program. They can say, we'll match 100%, dollar for dollar, 50%, up to $1 max, whatever you want to do. There's no set rule on that. But either one or both makes sense, and it'll make a big difference in the match. Another advantage of this new match program is we are matching quarterly. We look at the activity from January to March, for instance, that first quarter of 24, and we made the contribution from us in April and follow that schedule throughout the year. If you're one of those who registers your student loans through Fidelity to start tracking your student loan payments, we can only make that contribution match one time a year. It's just a limitation on the program because of the loans. So this gets the money in your account faster and gets it growing for your retirement faster. So I've thrown a lot of information at you. I don't hear Roger jumping in with any questions, so there may still be out there. But so I would ask, what's your plan? You know, the most important step you take is the very next one. You don't have to do all of this at once. And I would urge you, if you're hesitant to start small, but commit yourself to increasing every year what you're doing. Please talk to your church treasurer or your church board, whichever is most appropriate. Tell them what you're trying to do. Ask for their help. If you're bivocational, you need to consider everything your employer offers on the secular side as well as what's offered on the church side, so you're maximizing the best for your retirement. And if you haven't done anything or you haven't done enough, I will ask you to just forget the past because you can't change it, but focus on what you can do for your future, for the rest of the years of active service. But most of all, please don't wait. So here's how you maximize your NBUSA benefits from us. Maintain your credential and your eligible role. Pay your NBUSA fund budget at 100%. Make sure your local church does that so you get a basic life disability insurance. The amount of budget you paid, you saw on the table a little bit ago, talks about how much match you would get. Local effort is important. Make sure you're making contributions to your 403b account and or your church. Ask your church to help you. If you have student loans and you want to register them with us through Fidelity, we'll begin to track your student loan payments beyond that point, and we can match those dollars. Evaluate your need for additional insurance. Check your earnings history with Social Security and your potential benefits, and evaluate your status and your plan at least one time a year. This is not something you have to look at every quarter, every month, but you should at least do it once a year. The axiom in retirement planning is an adequate retirement is about time and money. The more you have of one, the less you're going to need of the other. That's why it's important to get started. We're sometimes asked if there's limits on how much you can contribute. That's usually not an issue for the average minister, but there are limits, and here's what they were for the last 2 years. On the left-hand side of this chart is the amount that you as an employee can contribute of your own money through payroll. And there's some catch-up provisions if you're age 50 or older here. And on the right is how much total can go into your account in a given year from yourself, your local church employer, and NBUSA. And some recent tax law changes modified these catch-up limits if you're age 60, 61, 62, or 63 during 2025. And you can easily Google those numbers or call us and we'll talk to you about it if that applies to you. If you're in one of those situations as a minister where you're not being paid, perhaps you're getting housing for your service, so you get no cash compensations, there's still a unique little known provision in the IRS code that says your church can contribute up to $10,000 per year into your retirement account, even though you don't have any earned income from the church. But there's a lifetime limit for you as a minister of for your life. Years, but 40,000 over your life is not very much. But this option is available if that applies to you. You know, we're here to help, and so is Fidelity. So you can connect to Fidelity online. You can call them. This 866 Nazarene number will take you directly to a portion of their customer service, which is what they call the tax exempt market. They deal with denominational church plans and municipal plans where there's not taxable issues involved. You can meet one-on-one with them. They have lots of tools online that can help you, but they're available Monday through Friday, 8:30 a.m. to 8 p.m. Eastern time. You can also reach out to our office. There's our 888 number, our email address. We're available Monday through Friday from 8 in the morning till 4:30 p.m. in the afternoon. Remember, we are not licensed financial advisors. We cannot give you specific guidance on how you should be planning for your retirement or how you should be investing, but we can get you lots of great and general information. If you go to our website and you click on the Your Role code, it will take you to this drop-down menu. If you're a ministerial employee, you click on that and it will take you to a bundle of information about the benefits specifically for ministerial employees. If you go to the right, click on the benefit login button, you'll get an option to click on the My NBUSA part of our website. This is a portal that's just for you. And if you're a new user, you can register. If you're a returning user, you can click in and just log in. But this is where you can see everything benefits related through NBUSA. You can see where you stand in our records. You can check your beneficiaries. You can make changes. But this is a great, useful tool for you to check out what benefits you have through us at NBUSA. If you've not heard of the Compass Initiative, they're offering financial education programs to ministers in order to get matching grant funds, either to use to pay off debt or put in your retirement. The grant came from the Lilly Fund, and I know the funds they've already got it lined up throughout the rest of this year, I think, and the funds are going to be gone, but they are taking a waiting list of names if you're interested in doing that. I want to close this presentation with a quick overview of a tool that we have developed at NBUSA, which we're happy to send to you. We're eventually going to get it on our website here shortly, but it's a little planning retirement toolkit. It's not a formal financial plan. It's just something you can use by answering 9 simple questions to get an idea of where you are and where you need to go for retirement and how do you fill the gap in between. So it identifies the potential value of your 403B plan retirement benefits. It quantifies the cost of waiting to do anything. Again, it's not a formal plan, but we think it offers you great information. So here's the first 5 questions that we'll ask, and I've got these pre-filled for an example. The first 4 are very easy. What's your age? When do you plan to retire? This minister wants to retire at 67. What average rate of return do you want on your funds before you retire? And we've said before, 7% is a great number. Most financial planners will tell you to do that. How much is in your current Nazarene 403B account? This particular minister has $10,000 in the account already by age 35. This is the hardest question of the 9. What's the target balance you want in your 403B account at retirement? And if you say, I have no idea what that number should be, start with something and see what the results look like. In this example, this minister has said, I think I need $500,000 in my Nazarene retirement account in order to retire well. So with that information, we go to the last 4 questions. And by the way, that $500,000 is the most difficult. But if you've answered those first 5, here's the last 4. At what age are you going to expect to die for financial planning purposes? And you remember I said earlier, Fidelity recommends using 93. So that's what I've put here. The average rate of return on your funds during retirement. So after you've retired, we drop that down to 5% because you're going to be taking less risk in your portfolio. If you remember those target date funds I showed, they got more conservative as you got older. So you want to be more conservative in retirement. You don't ever get completely out of stocks, but you're going to be more into fixed income when you're in retirement. And then you have to decide, how much am I going to take of the funds that I've accumulated? Say they got to that 500,000. How much are they going to stay taken out every year to live on? And again, financial planners will recommend something around 5%. And you can play around with this number in this tool. And here's the last thing to not forget. When you retire, inflation doesn't stop. So if all you do is take 5% and that's what you're living on every year, if you don't increase that by something, then you're going to start falling behind on your costs because of inflation. So typical inflation factor is 3%. So while 5% comes out of the plan the first year, 5% of the assets, the next year it'll go up 5% by 3% more. Not 5 to 8, but 3% more of 5%. So those are the critical factors that produce these results. So this particular pastor who plans to retire at 67 has 32 more years of active service. That $10,000 that was in their account today is going to grow by the time they reach 67 to almost just over 90,000. And that means to get from here to there, they've got to accumulate $400,000 of assets over these next 32 years. And that means they need to save $283 a month to get there. At retirement, that 5% of that money they're going to take out at the end of retirement is $2,083 a month. When they reach age 93, it's going to have grown to $4,300 per month. So the average over their 26 years in retirement is going to be just over $3,000. And at the end of age 93, when they hit age 93, they're still going to have $15,000 in retirement. So you might be asking yourself, how does this $283 a month, how does that work? Here's an example of what happens if you don't take steps towards that. So $283 a month is $3,400 a year. It only takes $108,000 of actual contributions to fill this $400,000 gap. So $108,000 to fill that gap over 32 years. It could be done at $283 a month or $3,400 per year. This particular slide shows the high cost of waiting. If this minister sees this information and says, well, that's good, I'm going to wait. If they wait 5 years, that means they only have 27 years left. They have to pay 49% more. They have to contribute 49% more to get to that $500,000 in retirement. If they wait 10 years, it's going to cost them 129% more than if they just started right now. So there is a high cost of waiting, and these numbers bear that out in the tool. So here's how this $3,396 might look like to be put away every year. $1,500 coming from the local minister. The local church matches 50%. Remember, this is just one example. It could be done any number of ways. So there's $2,200 of local effort that way. And then we come in at NBUSA, since this church has paid 100% of its budget, and we match 50% of that number. So we'll add $1,100 and change. That's how you can get to the $3,396 that's needed every year to get to that $500,000 number. Remember, the average contributed for the local church minister between the church, the minister, and NBUSA in last year's program was $5,766, and we're only talking about $3,400 here. So that's the presentation. Thank you for being with us today and for patiently sitting through that. Roger, do we have any questions in the chat feature that we need to address?
We don't have any questions at the moment, but happy to let the group hear. Here's one that just popped up, Kevin.
All right. While you're looking at that, let me say this. The QR code that you see on your screen, as well as the web address beneath it, that will take you to a portion of our website that's specifically devoted to the Minister's Match program. You'll see a presentation similar to this out there that's been recorded, as well as forms and other information about the program.
So Kevin, the question is, do you match up to $2,500 annually? And then also, does that mean that you have to give every quarter or just one lump sum?
Okay, that's a great question. Thank you for asking. $2,500 is the maximum amount out of the NBUSA funds every year. So it's an annual limit. So you can get 2 years, it's $5,000. 3 years, it's $7,500. You do not have to contribute every quarter. You can contribute in whatever way is meaningful to you. We encourage you to contribute every pay period, because that way you have money going into your account and starting to earn and grow for you faster, but it's not required. We just go back every quarter after. So let's look at this quarter we're in right now. At the end of March, after this quarter in 25 closes, we're going to go in and get a report from Fidelity. They're going to show us all of the local effort activity that happened among our eligible ministers. And then we're going to put that in a report, and then we're going to match those dollars in April. And we do the same thing every quarter. So the advantage of doing something on a regular basis, either monthly or quarterly or every pay period, is that you get a chance for your money being in and working for you sooner, and our match going to work for you sooner. Thank you for that question.
And then a follow-up question on that, Kevin, is the first step to have our church treasurer send money to you in the pastor's name?
Well, we'd love for you to send money to us, but that's not how it works. Thank you for that question. There is a form that you need to fill out, and you need to fill it out to participate in the program, and your church treasurer needs to fill it out. It says that your church wants to be a co-sponsor in this plan and that you're agreeing to put X amount of whatever works for you into your plan. Once we get that form, it takes a few business days to process it. We'll get you set up then with Fidelity so that your church treasurer can send your contributions as well as anything the church might want to do directly to Fidelity electronically. Saves tons of time, saves lots of potential for human error, and it goes directly into your account. We don't have to touch it. That's a great question. Thank you for asking it.
And Kevin, I think that contribution agreement form is in the Minister's Match resources or the QR code that you see there on the screen. That's
Yep,
where you'd
thank you,
find
Rod.
that. There's another question here. Do donations to a Roth count towards amount you will match or just contributions to the 403B?
Yes, we will still count contributions that go into the Roth component for the match, but we can't put the match dollars into your Roth. We can only put it into the traditional part of the plan. So you still get the benefit of the match. It just, the only thing that can go into a Roth component of the plan are your paycheck withholdings. It's just a stipulation of the Internal Revenue Service at this point. Great question. We'll wait just a minute if anybody else is typing furiously. But if not, I want to thank you for taking the time out of your busy schedules today to hear about what we think is a very important topic, and that's especially the minister's retirement. We're so grateful for your service to the kingdom and to your local church community. We're here to serve you. Our mission in this world is to serve those who serve. That's the reason we exist. We've been doing it since 1919, and there's no question we can't help answer. So please give us a call, reach out to us by email, talk to us when you see us at a district assembly or a PalCon or some other event. We would love to get to know you. We want to do everything to help you retire well. So God bless you and thank you for participating today. Bye-bye.